Bitcoin was supposed to crash by now. If you follow the traditional 4-year cycle, 2026 should be a down year. Hey, welcome back to lIHITRO Bank. My name is Adam. A brutal bear market. Instead, Harvard University just tripled their Bitcoin holdings to $443 million. Abu Dhabi's sovereign wealth fund holds over $500 million in Bitcoin. Something fundamental has changed, and if you're not paying attention, you're going to miss the biggest wealth transfer in modern history. For over a decade, Bitcoin followed the same pattern. Every 4 years, like clockwork, halving happens, price explodes, everyone gets euphoric. Then crash, down 70 to 90%. Rinse and repeat. 2013, 2017, 2021. The cycle was so predictable that traders built entire strategies around it. But right now in January 2026, the cycle is broken, and the smartest money in the world knows it. Let me show you what's different this time. Bitwise Chief Investment Officer Matt Hogan just declared the 4-year cycle is dead. Crypto Quant CEO said the same thing. Old whales used to sell to retail investors during peaks. Now old whales are selling to new institutional whales who plan to hold for decades. The buyer profile has completely changed. This isn't speculation anymore. This is Harvard Management Company. This is Abu Dhabi Investment Council. This is BlackRock managing $75 billion in Bitcoin ETFs. Here are the numbers that prove everything has changed. Over 100 publicly traded companies now hold crypto as of November 2025. Bitcoin treasuries hold more than 1 million Bitcoin, worth over $96 billion. Since spot Bitcoin ETFs launched in January 2024, they've raised $87 billion. And here's the crazy part. Less than 0.5% of U.S. advised wealth is allocated to crypto. That means we're still in the first inning of institutional adoption. Now let's talk about what killed the old cycle. 3 things. First, the Bitcoin halving becomes half as important every 4 years. The supply shock gets smaller each time. Second, institutional demand is constant and steady instead of the boom-bust speculation we used to see. Third, regulatory clarity is finally happening. Grayscale predicts Congress will pass bipartisan crypto market structure legislation in 2026. That's the game changer. Once there are clear rules, institutions that have been sitting on the sidelines will flood in. Let me tell you why this matters for your money. In past cycles, Bitcoin's maximum year-over-year increase was about 240% during the explosive retail mania phases. This time around, the gains are steadier, more sustainable. Institutional buyers don't chase momentum. They dollar-cost average into positions over months and years. BlackRock CEO Larry Fink confirmed that sovereign wealth funds were buying Bitcoin during the recent dips at $120,000, at $100,000, and below $90,000. They're accumulating when everyone else is panicking. Grayscale's 2026 outlook predicts Bitcoin will hit new all-time highs in the first half of the year, not because of retail FOMO, because institutional capital is still flowing in. When Harvard puts $400 million into Bitcoin, that sends a signal to every other endowment and pension fund in the world. If it's good enough for Harvard, it's good enough for us. Now, here's where it gets interesting for regular people. You don't need to be Harvard to benefit from this. If you're wealthy, you can allocate 5 to 10% of your portfolio to Bitcoin ETFs right now, while institutional validation is happening. If you don't have a lot of money, you can start with fractional Bitcoin purchases on Coinbase. The minimum is $10. You can buy $25 worth of Bitcoin every single week. That's dollar cost averaging, and it's the same strategy the institutions use. Let me break down the 2 strategies. For the wealthy investor, Bitcoin ETFs are less volatile than individual tech stocks like Nvidia. You get exposure to the asset class through regulated vehicles. You can hold them in retirement accounts. BlackRock's IBIT is the largest with nearly $75 billion in assets. Fidelity and Grayscale also offer Bitcoin ETFs. These are the same products Harvard and Abu Dhabi are buying. You're literally investing alongside the smartest institutional money in the world. For everyone else, Coinbase and other exchanges let you buy any amount. Start small. $25 a week adds up. That's $1,300 a year. Over 5 or 10 years with Bitcoin's historical returns that could change your life. The key is consistency. Don't try to time the market. Don't wait for a crash. Institutions aren't waiting. They're buying right now during this consolidation phase. What does that tell you? They see the long-term value. Here's what money solves when you own Bitcoin. You're not missing generational wealth transfers anymore. Every major technological shift creates massive wealth for early adopters. The internet, mobile phones, now blockchain and digital assets. The difference is this time institutions are validating from the beginning. The institutional era equals stability. It means Bitcoin isn't going away. It means the volatility will decrease over time as more professional capital enters. It means this is real. Countries are competing to accumulate Bitcoin before everyone else figures it out. This is different from every other cycle. In 2017, it was retail investors on Coinbase buying fractions of Bitcoin. In 2021, it was Elon Musk and Michael Saylor making headlines. In 2026, it's Harvard, it's Abu Dhabi, it's sovereign wealth funds managing trillions of dollars. The smart money has arrived and they're not leaving. They're buying the dips. They're holding for decades. They understand what most people don't. Fiat currencies have a debt problem. The U.S. has massive deficits. Other countries face similar issues. Bitcoin has a fixed supply of 21 million coins. You can't print more Bitcoin. That makes it digital gold. Grayscale makes a bold statement in their outlook. We can confidently predict that the 20th millionth Bitcoin will be mined in March 2026. You can't say that about dollars or euros or any fiat currency. Nobody knows how many will be printed next year. But we know exactly how many Bitcoin will exist. That scarcity combined with institutional demand is a powerful combination. So what should you do right now? If you don't own any Bitcoin, start with a small amount. Open a Coinbase account or use a brokerage that offers Bitcoin ETFs. Put in money you can afford to hold for 5 to 10 years. Set up automatic weekly or monthly purchases. Then ignore the noise. Don't panic when it drops. Don't get greedy when it pumps. The institutions aren't trading. They're accumulating and holding. You should do the same. The 4-year cycle is dead. The institutional era has begun. Harvard and Abu Dhabi are buying. Are you? Don't let this moment pass you by. Subscribe to this channel because we're going to keep tracking exactly what the smart money is doing. Comment below and tell me if you're already holding Bitcoin or if you're just getting started. Let's build wealth together. See you in the next one.